All right, good morning, everybody. So like we usually do, start with what happened in the overnight hours. Finance Juice is a really good resource for this. There's also an email that you can get from Bloomberg for free called 5 Things You Need to Know. So to get that email, just go over to Bloomberg. It'll pop up whether you have an account there or not. What we're looking for basically is anything in the overnight hours that may be impactful. And this morning, Russia shut down a part of their pipeline. So this may turn into something, right? We can see here Russia stops pumping oil through a pipeline to Hungary, to the Czech Republic, and to Slovakia. I'm sure I'm butchering those names, but they are suspending oil exports through the southern leg of the pipeline due to transit payment issues. This could turn into something quite significant, and that's exactly the kind of thing that we're looking for in the morning, right? When we come in, we want to know what happened around the world, what was going on in Asia, what is going on in Europe, and how might that affect our trading day. We also want to look for anything on the economic calendar, and today it's not much. It's normally something that we would kind of just shrug and overlook, but there is a productivity number coming out today. So we've also got U.S. Red Book. We got additional auctions. So definitely want to keep our eye on those. We broke out of a rising wedge in the overnight hours. Now, I know this is kind of cluttered. There's a lot going on here. But what we want to focus on is this lower line. A rising wedge generally breaks out of the bottom. Sometimes we get a squeeze first and we get that blow off top, and then we break to the downside. We didn't get that. We broke out of the bottom. Now the thing is, when you're looking at patterns like this and you're on a daily time frame, it can take a long time for things to unfold. It does not mean we're going straight down, right? Stocks and markets don't generally move straight in a straight line. But it is important to recognize if you run your trend line in what they call a swing over pattern, when you go to draw your trend line, if you start your snap here and you just swing your trend line over and stop at the first thing you hit, then we get this lower trend line, and we have broke out of it this morning to the downside. To try to gauge the way we would normally measure a pattern like this is we would measure the width of the wedge, and then at the breakout we would plot that measurement, and it puts us around 3,900. There is a lower trend line. I'm going to zoom in just a little bit more. Yeah, it's a little uncomfortable, I know. This line right here, so right now we're running inside day from this very large candle back here. If we put all of that into a zone or a box, then we have our top of the box, the bottom of the box. You can see that we're kind of diddling in the middle. The big purple bar there is the weekly pivot point. So it's the average weekly price of the ES futures. We've tagged it and kind of pulled back above it. It's a bit of a critical level. When we get underneath the weekly pivot point, we consider that a bearish bias. So we've got an angled line of support, and we have our weekly floor pivot underneath this. We also have yesterday's low as a pivot point that we have not yet hit on the ES. In the NASDAQ, oh yeah, we're already through all that. So here is the calendar for the day. I show this screen every morning so that you can go back and watch a morning briefing from over a year ago. See what happened on the intraday for that day, so that if you're going to do any research on whatever price action you saw that day, then your research could include what economic events we had on the docket that day. So this screen is always in the morning briefing, usually in the first 5 or 10 minutes. So as you can see, 8:30, 11, 11:30, and 1 o'clock. Those additional auctions are game changers. Keep your eye on those. Notice it doesn't talk about the red book here. It had the red book on finance juice, but not here. What you're going to find when it comes to economic events is that a lot of times you want to search in more than one spot. Take a look around, because you're not always going to find the same information on both places. And in fact, in reality, there's a lot more economic events than we're looking at here. Grain shipments, FX interest rate balance, all kinds of things that just don't rise up to the level of interest great enough to be presented on a day-to-day list. That doesn't mean that they're not impactful or not useful or valuable, by the way. All right, looking at the level of volume this morning at our current location compared to where we would be on any other morning, the number is a little hard to read there. 63.6. Right, that's cumulative volume. It's just been adding up every transaction in the overnight hours. So 63 compared to 78 compared to 62. On that 62 number, it was before the job numbers Friday, when everybody was on hold and we were waiting and waiting and waiting for those numbers. You might kind of be asking yourself, well, what are we on hold for now? CPI tomorrow. That's what we're on hold for. So it's kind of a hurry up and wait and see. The market really doesn't want to commit too much before we get those CPI numbers. We are underneath the daily pivot. It looks like we haven't hit it, so we came close a few times, but we did not hit it. That's a missed daily pivot, an MDP. If you're a pivot point trader, that's definitely a strategy worth learning about. Right now we're flirting with the weekly pivot point. Again, if we break below that, we change into a bearish bias. It's worth asking at the moment where that 4-period moving average is on the daily chart. This often is a surge level, and another way that we adjust our bias. When we are below the 4-period daily moving average, we're bearish. When we're above it, we're bullish. Cross-throughs generally are part of a surge play. You can see back here, for an example, where we crossed through in a surge. Back here where we crossed through in a surge. But if we're just crisscrossing back and forth through it, it kind of negates the whole surge thing. So right now we are flirting with yesterday's low and that weekly pivot. Should we break that, we've got a retrace level at 41.21. That happens to be the 618. If we break that, we got ADR half at the cog line, 41.11. And then a 786 retrace the previous week's low at 40.80 and a full ADR at 40.75. We've been in this range now for quite a bit of time, and the longer we stay in this range, the more energy we're building. We're just building up more and more and more energy. Here we're looking at the daily chart of the ES. Been talking about that sideways range. You can see the big cup in the bigger picture here. We got tangled up into the same mess we were tangled up in before. And so far, the outcome has been exactly the same, that we're just spending a lot of time there. We're not going to stay here forever, right? It's one of the promises of the market. We cannot stay here. This lower indicator is asking how far away from the 10-day moving average are we? When we get back to zero, it shows that we are at that 10-day. When we're above the 10-day, we're bullish. When we're below it, we're bearish. But it's also like the center of the basketball court. The game can be played on either side, starting from the middle. When we talk about overbought or oversold, a lot of times we reference how far away from the 10 we are. The farther away from the 10, the more overbought or oversold we are. It shows that we moved too far too fast. But when we are at zero or really close to zero, it shows the market has the capacity to make some of the biggest moves at that point, because it is not yet outstretched. So we have a market wound up energy-wise, building more and more and more pressure, and it is at the zero line. It's at the 10 basically. So the move that it could make may well far exceed the ADR. The ADR is the average daily range. So right now the ADR says we could move to 41.11 and it wouldn't even be considered an unusual day. We could move to 40.75 and it wouldn't even be considered an unusual day. With everything wound up, you can actually take that ADR and increase it by another 50%. So we're talking about another 0.9. If we were to do that and plot it below the current ADR full, that gets us a move down to 40.37. That would just begin to touch what an extreme move today would look like. And for the upside, should everything begin to change, say we get some economic data or some news that galvanizes the market and turns us around, 42.60 is not out of line. Three things the market can do is maintain the range, break to the upside, break to the downside. Well, we are right now breaking to the downside, right? That's literally what we are doing. So there's our inside day breakout. Whether it sticks, well, we'd want to look at a lot of the other things. Should we get back inside the box, we've got to renegotiate the low of yesterday, the weekly pivot, the 4-period daily moving average, the close of yesterday at 41.48, the daily pivot, which is right in line with our own Globex high at 41.55. We would have to negotiate our way through VWAP. the cash open of yesterday, the previous week's high, and then 41.85, which is the ADR half. We get through that, then we get the high of yesterday, 41.88. Seems like that previous week's high is just moving in weird places. 41.88, and then a full ADR at 42.21. The base case argument for today is that we are going to retest Friday's lows and maintain within the box. So between Friday and yesterday, we've got a pretty good sized box, 41.90 all the way down to 4100. I have every expectation that we're going to stay inside this box until we get the CPI numbers. Depending on those CPI numbers, we are going to continue this advance to the upside, or we are going to begin retracing back through the last month and a half to the downside. So it's all on the CPI numbers for tomorrow. It's worth noting on the 10-day, 30-minute volume profile how shallow, how narrow that profile is right now. At some point through the day, we're going to drop off this back end set of candles, and that's going to reduce the data that we're using here significantly. So we will no longer have this high TPO zone, and we won't have this large collection of volume down here. Right now we're underneath the point of control, having just passed through it, and we're a little beyond the midpoint of this profile box. So we are at the greatest amount of volume, the greatest amount of TPO, and we are within the boundaries about midpoint. When we're at the high, we have an expectation that we go to the low. And when we're at the low, we have an expectation that we go to the high. But when we're in the middle, we have an expectation that we can go to the high or that we can go to the low. There's really not a lot on the volume profile that we can carry forward from the previous day because we've already hit the value area low. We could grab a value area low from Friday. That would be 4105. If you're learning how to use the volume profiles, that's what they teach, is to carry forward the value area high and the value area low in the point of control. I generally don't do that. I've got enough pivots. I just bring forward the point of control. But, you know, it doesn't hurt to market, especially just learning the steps, right? Doing the thing. Got a breakout in gold. We are above yesterday's high. Kind of sticking the move at that point. Looks like it's waiting on VWAP. Bitcoin had a significant sell-off with the rest of the market, flirting with that 4-period moving average right now. Seems to have broke through it. We're going to watch to see if it keeps it. This is a perfect example of breaking beyond the 4 with a surge. Yesterday's price action, and then stalling out and coming back to revisit that 4-period. Bonds also broke the 4, broke VWAP. We're still near, well, not even near. We're inside the lines. We're not at the middle. We're not at the high. We're not at the low. We are under the VWAP. We're going to look to see if the bonds kind of calm down a little bit. Otherwise, we've got stocks and bonds down on the morning. Not the same amount, obviously. Bonds are faring a little better maybe, but they are down this morning. So we got both of these markets moving in the same direction, down. Generally speaking, stocks and bonds don't move in the same direction. So when we see that, we got to recognize it, but it lands us in a category of when what should happen doesn't. The dollar did briefly get below that 106, but we've bid back up above it. Definitely want to keep our eye on the dollar. It's been our kind of gauge of weight or resistance or risk on, risk off sentiment. And the VIX woke up a little bit this morning. Not much of a surprise there with the news about Russia and that pipeline pushing oil higher. Now, part of the thesis for the last few weeks is that we would see a fade in energy, giving tech the room to run, right? Or the way I was taught to say it, a rope to hang itself with. So with energy faded off like it has been, it pretty much just unshackled the marketplace and gave it that freedom to run around and make moves and not have that constant drumbeat of negative weight pushing against it. But if we continue to see this rally in energy, in crude oil, then those shackles are coming back on. Those weights or restrictions are coming back onto the marketplace. It's going to severely handicap the rally that we've been looking for. As if we weren't already handicapped, and we could see that from the 4 or 5 days in a row that the S&P has been sideways. But it's the S&P. It's the monsters of tech. Everything else, there's a lot of really great moves out there right now. A lot of really great markets that are on the move out there right now. It's just not in the monsters. This is why breadth matters so much. When people say, well, if the monsters of tech run everything, why do we look at anything else? Why not just look at the monsters of tech all the time? They run everything most of the time. It's important to realize when they're not running things, and then we actually have to go and pay attention to the other 90 names in the S&P 100 or to the other 90 names in the NASDAQ 100. This is one of those times. With this move in energy, if it puts a weight against those other 90 names, then that's it. We won't have tech, and we won't have the rest of the breadth. We are in a severely bifurcated market this morning. The NASDAQ is down twice as much as the S&P, and bonds are down nearly as much as the S&P. So we're looking for some real guidance out of the market right now. I came into the chat room yesterday afternoon and ran a live stream pointing out just whatever trades happened to show up in the list. And we went through the Dow, and then we went through one of my own little private lists. We're going to be doing that more often, at least twice a week. During that live stream, I also seen a couple of names that weren't ready to be traded yet, but were on deck. They had a trade setup coming. One of those was Verizon, Intel, Costco, so a couple of names on the list from yesterday. Right now we want to ask that question, what's moving in the pre-market this morning, and is it offering us any opportunity? Well, surprise, surprise, energy's up a little bit this morning. Econ Mobil up the most, nearly 0.75%. Behind that, Chevron, ConocoPhillips, and behind all of that, Boeing. My benchmark is around 0.5%. So, if we zoom up, it's like the top 3 names, and that's it. ConocoPhillips, Chevron, and ExxonMobil. So we're going to be looking for more names to kind of get into that. If we look at what's down this morning, and by how much, leading the way is NVIDIA, still 2.5%. Behind that, Nike, Salesforce, Texas Instruments, IBM. It's a heck of a beat down in IBM. Qualcomm, PayPal, Google, Facebook, Amazon, Netflix, Broadcom, Apple, and that's pretty much it, because the rest of them that are down less than 0.5%, right? That benchmark again. And it makes sense that they're down because we're seeing that move reflected against that move in energy, right? So energy made a move, put the smack down on the S&P and the NASDAQ. Now we're seeing the effects across the board. When we talk about what we could see in the market, a lot of times it is tempered by the realization that news has the capacity to break our technical analysis. So all the work that we do on a day-to-day basis to try to figure out what's going on in the market, it can all get thrown right out the window when a pipeline gets shut down. So right now it's going to be the market to watch. It's going to be the news to keep your eye on. Any information about this pipeline shutdown, when is it going to get turned back on? Is it going to turn back on? Are they making any demands to turn it back on? And then from that, what are we seeing in the charts? Especially with crude oil. But the dollar and the bonds come into play on that, right? So what you want to keep your eye on. I appreciate it, everybody, and we'll see you all tomorrow.